Thank you all for making yourselves available. We realized that as we were preparing the packet to transfer funds from Rockland Trust over to Peacock and PARS, that oh, actually, I apologize. Let's back up a little bit. This meeting is accessible to people with disabilities. Microphones or telephones will be used by all speakers. Large print materials are available upon advance request. If you would like either of these accommodations, please contact Mary Waldron at 508-583-1833. The notice of non-discrimination rights and protections to beneficiaries with regards to the federal Title VI non-discrimination protections and the state non-discrimination protections is posted in this meeting room and is available on the Old Colony Planning Council website. Please contact Mary Waldron at 508-583-1833 for more information. Thank you. So, getting back, taking a quick look at our agenda. We're not going to wait until 5 to call it to order.
Oh, that's my fault. Sorry.
I noticed this yesterday, and I'm like, well, it's too late now. But again, thank you for everybody for getting together so quickly. We realized as we were preparing the packet, thank you for Christine for making yourself available to get the signatures done. As our acting treasurer, as our treasurer now, not acting. And we realized that there is a income or an investment strategy selection that needs to be made by the committee. We determined that, Charlie and I had a brief discussion and determined that since there are 4 available with PARS versus the 3 that were available with Rockland Trust, it wasn't necessarily apples to apples. We wanted to make sure that the committee was aware of what the investment strategy selections were. So we will present those quickly. Dennis, thank you so much for being available to us to be able to answer any questions and kind of go over the investment strategies. At that point, we can make this final decision and then proceed to get the packet to Katie, I believe. So yeah. Is it Katie? Is it Catherine? What do you prefer?
Kate or Katie is fine. Catherine is on my driver's license, so you don't have to call me that. But I just wanted to interject and say thank you on behalf of Dennis and I for inviting us to this meeting. And as a procedural note, we have 4 portfolio options that are available to you to use at any time. So if today you select option A and down the road you'd like to consider another one, Dennis and I are always available for this kind of meeting. And we will be meeting with you periodically anyway to give you an update. So this choice you're making, you can adjust. When I was communicating with y'all about this meeting, these are Dennis's portfolios. He created these, he's managing these. This is his daily focus. So he's the best one to talk to you about these. And really this conversation should be where is Old Colony Planning Council today in their funding? Where do they want to be, both short-term, long-term? And this is a 30-year investment kind of approach and a project. So he'll be able to best talk to you about what's the good fit for you today. But please, I always wanted people to know that the commitment you're making today is not a permanent commitment. So these are conversations you can have with him at any time.
Thank you, Katie. We appreciate that. And actually, in full disclosure, there was a very brief conversation about, all right, let's just pick something. And we could always go back and make the change. But we really felt that in order to kind of do this properly, we should get the committee together as quickly as we could. Rather than 1 or 2 members making that decision just simply because it was in front of us, make sure that, we're all on the same page. So,
and Dennis can answer all of your questions together. You can hear all the questions and the answers together as a group. I think it's important.
Sure. All right. Could we do, I apologize, could we do a quick roll call just to make sure that we have a quorum in place?
John, do you want me to do that?
If you would, that'd be great.
All right. So do we have Christine Joy?
Present.
Charlie Kilmer?
Present.
Sean Noel?
Present.
Steven Santusanio?
Present.
and Pat Giamella.
Present.
And then we also have myself, Megan Fournier, and Catherine Canny and Dennis Mullins on the call as well.
Thank you, Megan. And that is the full committee, so we do have a quorum. We can do
We
a
do
quick
need to
review of
approve the
Minutes.
minutes
Action.
as well. Yep.
the October 16th meeting minutes.
Mhm.
You have those available?
They were sent,
They were sent in the packet, correct?
I believe. Yeah.
Okay.
So I guess we can do, we need a motion.
Yep, I would entertain a motion to accept the minutes from the October 16th meeting.
And I'll
I'll make
second
that
that.
motion. I'm sorry. Okay.
Great.
Okay.
Thank you. Roll call, Christine Joy.
I'm going to abstain. I wasn't present.
Yeah. Charles Kilmer,
Yes.
Sean Noel,
Yes.
Stephen Santisanio,
Yes,
Pat Giamella.
Yes.
Right. That is a unanimous approval.
Okay, very good. So, Megan, I can share my screen, correct?
Yes, or I can just put
All
it
right,
up if you'd like.
great.
Is this what you were wanted?
Yep. So this is the form that really is in question. Everything else, Christine signed and, it's a pretty clear picture of, but we do need to make an investment selection here. So, at this time, like I said, as I think we can all kind of take a look at it, but Dennis, would you like to take the floor and just kind of give us a brief overview of each one of these four?
Sure. So the strategic range is shown on the right-hand column here. I think unnecessarily complicate what we're looking at. These portfolios are starting with aggressive growth. Let's start at the bottom and move up. The aggressive growth portfolio is basically 80% stock, 20% bonds. So it's 80-20. The growth portfolio is 70-30, roughly. The balanced portfolio is 60-40, and the income portfolio is 50-50. So we're just, we're taking money out of stocks and putting it into bonds as we move up this chart and become more conservative. Kate mentioned the key ingredients that go into making this decision, but let me go over them again real quickly. First is time horizon. How long are you going to leave this money in the OPEB trust? For most agencies, it's a long, long time. 10 years, 20 years, 30 years, 40 years. That leads us to the bottom of this page, more aggressive. And the reason for that is stocks are very volatile. They will have years where they lose money. Bonds will too, but not as often and not as much. Stocks will have really bad years. They'll have really bad months. They'll have really bad quarters. But with the stock market trading at or near all-time highs right now, that means that the stock market has made up every loss it's ever incurred. And we believe that's going to continue. So if you have a long time to wait around for the stock market to come back, you might as well take the risk, be aggressive, and put the money away and don't look at it every day for stock investments. So that's the one end of the spectrum. And again, that's time horizon. That's the first ingredient. The second ingredient that goes into this discussion is, what are your anticipated cash flows? And that kind of comes back to your funded status level. If you're in the early stages of funding your OPEB liabilities, probably going to be a while before you're pulling money out. If you're anticipating pulling money out of your OPEB investments in the near future, we want to have more bonds. And the logic there, very quickly, is that I already mentioned stocks are going to be up and down, right? But the trend is up. So you got a lot of volatility. We want to have bonds in the portfolio if you're going to be making distributions out of your OPEB, because when we need to sell something, we don't want to have to do that when the stock market has just fallen 15 or 20%, because then we have to lock in those losses. and that'll really affect your long-term return. So number one is how long are you going to be in here? Number two is when are you going to start pulling money out? Or conversely, are you just planning on funding? Most OPEBs, most agencies that we see across the country are in the early stages of funding. They're going to be there a long time. They're searching for sources of funding, trying to get something on the budget, just in the early stages again. So it's long-term, just going to be funding, not going to be pulling anything out. So most OPEB investments are between growth and aggressive growth. But again, what comes with that is that recognition. Next year, the market might be down 10%. And if that's the case, yeah, that's the plan. We don't know when the market's going to go up and down, so we don't try to time it. Literally nobody does, right? Except TV personalities. And it's very difficult to say when the market's going to go up, then when it's going to stop, and when it's going to reverse course, and when it's going to go down. We don't put our time and energy into that. But we do feel very confident that the trend of the market is going to be up for the long term. And all of these volatile up and down periods, they iron each other out over the long run. So, and again, that's just been proven in the last couple of years, right? Aggressive investors lost a bunch of money in 2022. And then they made it all back up in 23 and 24. And it's been quite a roller coaster ride. But their growth has been much greater and had a real impact on the value of these OPEB funds. We do have some entities. Well, let me pause there. So the first one is time horizon. The second one is, are you going to start withdrawing these funds anytime soon? The third element that really goes into that is your temperament, your personality, your experience, your ability to withstand the ups and downs. And in this category for public entities goes that risk that we refer to as headline risk. This is public information. And sometimes the local cub reporter from the local newspaper gets a hold of a report that shows your OPEB assets, were down 10% last year, and that makes a good headline story. How sensitive are you to that? Most entities have gotten beyond that, but we still do have some that take a very conservative approach to investing against our recommendations, because that's a primary driver for them. And that's the reality of elected positions. So, those are things to consider. I can tell you that most of my OPEB investment reviews, when I make a recommendation to somebody to change investment strategy, I am always recommending that they become more aggressive. I routinely meet with OPEB clients who have been at this for 10 years and they're still very conservative with their investments. And we tell them, hey, you've met the test for being a long-term investor. You're making only contributions, you're not making distributions. Ratchet up the risk here. And so that's sort of the lay of the land. That's where we are typically taking the conversation. So again, I guess the questions would be, what is your funded status level? What is your actuary telling you your funded ratio is? What is your time horizon? How long are you going to be at this? And then when do you plan on making distributions? I think those would be the most important questions to answer.
I have a quick question.
Mm-hmm.
In regards to the strategies, the 4 different strategies here, is there an opportunity to select maybe a percentage for each strategy? Like, for instance, just out of curiosity, let's say 50% aggressive, 25% growth, and 25% balance or something like that. I don't know. What do you think of something like that?
You could. We don't have anybody who does that.
Okay.
Because if we can add that up and if your overall mix of assets ends up being roughly 60-40, then you could
Yeah.
accomplish the same thing by just putting it all in the balanced portfolio.
Okay.
Yeah, we
No,
haven't,
it
like I
just-
said, we haven't had anybody do that. We've had some very large OPEBs do that. Not in the Plymouth County OPEB Trust program, but in other programs. I would argue they're not really accomplishing anything that they couldn't accomplish just by, striking that same overall balance. And your question kind of reminds me of an important point. We have the same holdings in each of these portfolio strategies. We just scale them differently.
Mm-hmm.
So you're not, they're not that different, I guess is the way to say it. If we index the large cap US equity portion, we index it for everybody, that kind of thing.
Okay.
Yeah.
No, my theory is that if it's gonna be, like you said, a long-term thing, I think mine would be to go with aggressive growth. But as you get closer to the time where you start doing distribution and stuff, I was thinking maybe would be the time to do something like that. But
Yeah, that's a
again,
good point. Yeah.
That is something that could be considered if at a certain point you were like, we're going to be taking X dollars over the next 2 to 3 years. We could establish a sub account within your account.
yeah,
And just do it that way if you wanted to.
yeah. No, like I said, it's just thinking out loud.
Yeah.
Mhm.
Yeah, we and to that point, Kate, we just had somebody on the West Coast who is going to pull out X dollars in February of next year. And so we put that in a sub account, just leaving it in money market. So we can be smart about how the money's invested if you have a pretty clear idea of what your cash flows are going to be.
Mm-hmm.
So,
Hey.
Dennis, I put in the chat our most recent actuarial analysis
Oh,
from Odyssey Advisors.
Mhm.
okay.
Thank you, Charlie.
So if I read the chart on page 3, PDF page 12 or 13, fully funded is around 2035, 6, 7-ish. And I believe we're about
Mhm.
60% right now funded.
Okay.
Okay, good. Yeah, and your discount rate, this is another thing that I didn't bring up, but it's the discount rate is 5.37. The discount rate is important. That is, it used to be the expected return of the portfolio. Now it's a blend of the discount rate of the expected portfolio plus the 20-year municipal bond average rate. And it's the expected return of the portfolio on the portion that's funded. It's the 20-year municipal bond rate, 20-year high-grade municipal bond rate for the portion that is not funded. So what does this mean? This means that if you choose a more aggressive portfolio, all other things being equal, the expected return of that portfolio is higher. That means that part of your discount rate will be higher. The higher your discount rate, the lower the present value of your accrued liabilities. It benefits you to have a more aggressive portfolio with a higher expected return. Did that make sense?
Yep.
Okay.
Mhm. Stephen, any questions?
I'm all set. No, thanks, Pat. Oh, thanks, Sean. Sorry.
That's all right. Christine?
I guess my question is really more for the committee. Is it our intention that once this is fully funded, that we're gonna start to pay disbursements out of the fully funded OPEB? Which I thought that was the intent. I see
Charlie?
Charlie shaking his head. Yeah, I think.
So ideally, yes. I think entities traditionally wait until you're fully funded before you start taking distribution. But that doesn't preclude you from doing it sooner if financial needs arise and you need the money. If you're at 80%, 90%, you can start taking the money out. Something else that's also happening on a parallel effort too is OCPC is contributing monthly and for a total amount of 60,000 a year, if I'm not mistaken, Sean.
Yep, that's correct.
Yep.
So
And we've been doing that
obviously
for quite a
it
while.
gets to a point where if you start taking money out, then we're going to reduce the amount we put in too, right? So
Right.
and just live off the gains.
Mhm.
But I'm assuming that even though when you start the distribution, that you will continue to put money in.
Right, because you don't want to draw down the principal too much.
Correct.
And I
So,
believe the current Rockland, well, I would call it the previous investment strategy was a balanced approach,
Yes, that's
Mhm.
correct.
equivalent on this scale. So
What was the final amount that was transferred over? Or that's going to be transferred over?
Um,
it's about 1.2.
Right.
1.2? Okay.
Brandon and I were just discussing, there was a loss this current
Yep.
month for the month of October. In the fund for about 17,000. So, but Charlie's right. We should be right in that $1.2 million range.
Okay. No, just curious.
Mm-hmm.
all right, Sean, can I ask a follow-up question then to Dennis? So
Certainly.
that if we're looking to start distribution out of this fund at in or around 2035, which isn't that far off, because he was talking about, longer terms, how does that impact? Would he still recommend we go with aggressive growth?
Dennis, you still with us? I know he had.
I think we might have lost him. Hold on. Oh, here we go. He went. I'm promoting him now.
Okay.
Well, that might be the
I
time when
was
you
here.
get-
I heard the question. Hold on.
Okay.
Let me get everything turned back on. I closed out of your actuarial study and I closed out of everything. So sorry. Yeah, 2035 is still a long way away. 10 years is still a very long term. So I would go growth or aggressive growth. And that growth is the original portfolio. And if there's any apprehension at all, you could start off with growth. It's roughly 70-30. It's a little bit more in the stock market than you've got now, based on what you said. And go from there. And if that works out for you, maybe move up to the aggressive growth.
Thank you, Dennis.
Mm-hmm.
Dennis, I got a quick question. You mentioned creating like a sub account to pay out distributions down the road, like in a money market fund. How soon in advance do you recommend creating that sub account, just so that money's not out of the aggressive growth strategy and is just sitting in a money market or something, while you wait distribution, so it's not really earning as much as it could in the aggressive
You just
growth.
if you're going to make a distribution, absolutely certain you're going to make a distribution within a year. I'm comfortable at that point pulling it out of the market, because who knows where the market's going to go in the next year. And we just don't want to expose it to the risk. And it probably takes a couple of weeks or a month or so to get that all set up.
Okay.
So we want to have a little bit of lead time, but
Okay.
it really depends on when you have absolute certainty that you're going to be making a distribution.
Thank you.
But Stephen, you're raising a good point. If you're going to start, let's say you have 1.2 million in there and you're going to start making periodic distributions of 5,000, 10,000, 15,000, I wouldn't set up a sub account for that.
Okay.
The portfolio is always spinning off liquidity. We've got income coming in on the bonds. We've got dividend income coming in. But I was talking more about, if you're liquidating the portfolio and you're going to be paying out big chunks of it, I would go more towards income at that point, or even something more conservative. But for distributions in the normal course of business, there's plenty of cash in the portfolio.
Gotcha. Thank you.
Mhm. And as Kate said, it's not an irrevocable decision. If you go into one of these strategies and 90 days later, 30 days later, you're like, hey, this is not working. Well, let's change it. And there's no cost to making that move. We always kind of point out we don't want people trying to time the market. No one ever has. But that's not why the options are there, as you can see. But and there's no incentive for you to pick one or the other. Our fees are exactly the same either way. We have agencies that will change from time to time. The best reason is if your investment objectives change, your time horizon. Sometimes they will change because there's a change in leadership. Not the optimal reason to be using that feature, but it happens.
What type of time does it take to make these changes? Is it like a week, 2 weeks, a month?
I don't know, Kate, I'd say about a week. What would you say?
It's the administrative portion is about 24 to 48 hours of signatures. Your plan administrator treasurer will be required to sign a document similar to this.
Okay.
They reissue this document. It's then sent to US Bank, and then they notify, and Dennis and his team do the work. So we say about a week. Sometimes it's quicker, but we give
Okay.
ourselves a week.
Just curious.
Yeah.
Yep.
Sean,
And
can
that's
I
the
ask
same
one more
process
question of
actually for-
Dennis?
What's that?
Um,
Oh, yes.
so on growth, you say formerly known as Plymouth County OPEB Trust.
It's the
So,
original, yeah.
so that's where they have been, their fund has typically or traditionally been in the growth area, correct?
Yeah, that's a good question. So when we started the program, there was only one investment option. And so everybody was in growth. And then, people were asking for it and competitive pressures, and it was a good feature to have. So then we added the other strategies. So aggressive growth, balanced, and income. And over time, as new participating agencies have come into to PCOT, some of them have chosen, there's money in all of them now. But originally, the only one there was growth. So that's why it says formerly known as the pool. That's why that note is on there. It's the original.
Okay.
So if there's, 90% of the assets are in growth because that's where everybody started. And it's worked out really well. It's just been a great period for growth.
Thank you.
All right, thank you, Dennis.
Sure.
So, do we think we're ready to make a decision? Do we have any more questions? I'm sure we could still just sit here and talk about this all day.
Mm.
So. So one thing I did want to bring up, just simply because of, if we're comparing ourselves to a municipality, there's some guaranteed income there, with tax revenues and so on and so forth. We can be, based on the high level of grant income that we have, those can sometimes be a little bit more susceptible. So I'm not sure if I particularly would be comfortable going all the way up to an aggressive growth strategy, just to allow us the flexibility of, not having, kind of going all in terms of, like a poker bet. I do think, however, that I think it would be pretty comfortable with the growth fund. I don't know how the rest of the committee feels, but if we can get some input and then make a decision, I think we'd be all right.
Sean, are you looking for a motion?
Again, that was just my recommendation. If there's enough consent within the committee, and nobody has really any kind of a dissenting opinion against that, then yes, I'll call for a motion.
Motion to select the growth.
I'll make that motion.
Okay, do we have a second?
I'll second the motion.
Okay, so we have a motion and a second to accept and select the growth investment strategy. Can I get a roll call, please?
Christine
Christine?
Joy? Oh, sorry,
Yes.
go ahead.
Okay, Steven Santasonio,
Yes.
Pat Chiarmella,
Yes, I was leaning more towards the aggressive growth, but I'm looking at the equity numbers and the some of that. It's not really much different when you look at the numbers itself. So
it's
I'll,
really on
yes,
6%.
yeah, so yes.
Okay, Charlie Kilmer
Yes.
and Sean Noel is also a yes. So we have a unanimous vote to select the growth strategy. So we will get this paperwork filled out and get the paperwork
Perfect.
packet. That's going off to you, Katie?
No, that goes to Amy Wallace. She's been
Okay,
sending you
that's right.
the information. But yeah, but always include me in any questions you have or updates.
Excellent.
Always here.
All right. Well, Dennis, Katie, thank you so much for the presentation. It was very informative. We appreciate it. And certainly for the rest of the committee, Christine, Stephen, Pat, greatly appreciate you making some time this morning so that we can get this off our plate.
No problem.
Absolutely.
Thanks, Sean.
And I don't know how often you meet, but please let us know. We're available to meet with the committee, walk through your documentation, market overview. I am going to plug this one event in April of 2025. We are having the quote unquote 10-year anniversary of the Peacock OPEB Trust program. So we'll be having a luncheon for all of our members. Dennis will be giving a market overview and invitations will of course be forthcoming.
Excellent.
Just want to get that on your list. Okay.
Thank you.
Great.
Okay.
All right. Motion to adjourn.
So
So
moved.
moved.
Second.
All right. Thank you very much, folks.
Thank you.
Everybody have a
Happy
good
Thanksgiving, everybody.
Thank
Yeah,
you.
thank
Happy
you. Bye now.
Thanksgiving.
And welcome back, Christine.
Thank you.
Yes,
Thank you for having
absolutely.
me.
With
Yeah,
open
yeah.
arms.
Yeah,
So,
Bye.
all right.
have a good one.
Bye, guys.
Bye.
Bye.